Welcome to the Pirls Stock Market Commentary for market week ending Friday, February 21st, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.24 to 1.55, advancing further back to bullish territory. The total count of securities in bullish or bearish patterns rose 1% to 2,054. The count of bearish stocks decreased 16%, while the count of stocks in bullish patterns increased 11%. The Sand to Pearls P&F Market Breadth Summary chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 112 points for the 13th rise in 28 weeks. At a positive 34.69 points, it continues below all 8 tops above plus 100 and above all 6 bottoms below minus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 3 accumulation days and 2 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Tuesday, 2/18 close, the CCI 20 daily had 6 days above zero for a change of trend. At 113.64, it is outside the plus or minus 50 range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite began a Woody's uptrend 53 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. The CCI 20 weekly continued upward after last week's zero-line reject long entry point. We will continue to follow this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top and bottom 5 industries are positive. Bullish, semis continues in the top 5. REITs and disk drives have left the bottom 5. Bearish, gold and silver remains in and continues to lead the top 5. Networkers remains in the bottom 5. Computer hardware has left the top 5. Banks and S&P retail have entered the bottom 5. Focus this week. With China the insecure global power, we take a step back and look at China's new role in geopolitics, knowing its new economic power is a reflection of the larger picture. A couple points from the article. Chinese investment and trade are all welcome in the former client state of Cambodia, but the days of Beijing supremacy are long over. A similar pattern can be seen in Vietnam, Myanmar, the Philippines, and Laos. The era of stark choices between friends and enemies fostered by the Cold War has left a region with blurred allegiances and almost constantly changing loyalties. This expectation of prominence and power by outsiders toward China seems to have made the country even more jittery even more narrowly focused on relatively small strategic issues like its maritime borders, and even more defensive. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary. We hope that this weekend has been a pleasant one for you, that you have a great week coming up, and we wish you true success.